G'day folks, Jim here from FX Charts, Friday 31st January. Well, the dollar's a bit stronger all around today, with the exception of the Aussie, but it is performed reasonably well, despite the US data being a little bit mixed. The GDP was the highlight, and that came out at a reasonably respectable 3.2% year on year, but it was lower than the 4.1% reading of the previous quarter. But having said that, the dollar performed reasonably well today. The euro's a bit lower, as is cable, and the emerging markets have held steady, which has meant that the equity markets and bond yields have climbed a little as well. So the yen and the Swiss franc, which have been under some pressure on the top side, really as a safe haven, they've given back a little bit of their ground. So we're going to have a look at the charts, and as you can see on the euro, it broke that 136 figure level, and really has been in a bit of a straight line down. It's held around this 135.5 area for the last few hours, and probably will continue to do so. The hourly charts are a little bit oversold, and they may need to climb a little bit before we can get the next leg, which I think we will see another leg down. As you can see, we're breaking this longer term trend support, and I think eventually the 4-hour indicators are pointing lower. So, and eventually I think we're going to get a test this 135.25, 135 level, and if we go under there, then possibly we see a move down to sort of 134, 35, 40. Now that's a bit of a way off, but the market's going to be focusing later on today on the EU inflation data, CPI, an expected reading there of 0.9% year on year. Now, if we get anything lower than that, the market's going to think the ECB are about to ease rates again. So I think the pressure's probably likely to stay on the euro. As I say, the 4-hour charts are pointing lower. The dailies pretty flat, really. So I wouldn't. I don't think we're going to get a steep sell-off, but if anything, it's going to ratchet towards the downside. And I think that is going to be the direction. And having broken this, or on the basis we are breaking this support line, I think that's probably the way to go. Now on the top side, the base of the daily cloud, if I can find that, that's coming in right here about 135.60, and we've got the 100-day moving average at 136 or so. So I don't think we're going above there. I'll put in the daily cloud, and you can see it, but it's a little bit confused on the charts here. But as you can see, we've broken below this cloud, and now I think as we head back towards 136, there's going to be good sellers. So I'd be looking to sell into any strength today, I think. Moving along to dollar yen. Well, the emerging markets, as I say, they stay reasonably steady. So bond yields climbed, equities have climbed. The S&P is back at close to 1790 as we go into the close. Now, the dollar, it has moved up off this recent 101.85 low. It's yet to see 103. I'm not sure that we're really ready for it yet. There's a bit of data out of Japan today, the CPI and the jobs data. This 102.90 is going to be the initial resistance, and then above there we get up to sort of 103.30, which is that 100-hour moving average. The 4-hour charts, they do remain positive, and we could see a further move higher. And as far as the dailies go, though, we are still pointing low. So my view is that we're going to see a 102.30, 103 range today. Look out for the Japanese data, but it is the Chinese New Year, so overall liquidity is a little bit thin, and we may get a bit of a lack of interest. Sterling, that fell heavily in line with everything else. Sterling was helped on its way by month-end selling, by a Mark Carney statement that said that interest rates aren't going to change anytime soon. It's going to be the end of 2014 before we can even consider any rate rise. And also mortgage applications were soft. So sterling fell quite heavily. It got down to this the 61.8 FIBO support level at I can't remember where that was, 164.40 or so, 164.45. It's bounced since then back to 165.20, and it's now chopping around this 50% pivot. Now the hourly charts are suggesting we're probably going to remain around here. The 4 hourlies though are picking up downside momentum, and the dailies we're going to come back down here, I think, and test this 164.25 level again. If and when we break that, I think we're possibly headed for a bit of a move lower, possibly to as low as 163. That's a way off as yet, but down around here should provide some support ahead of the first FIBO level, which isn't really to be seen until 162.25. Now I don't think we're going there yet, but I do think that's the direction of it. And as I've said before, this bearish divergence is slowly working its way through the market as far as cable is concerned. Dollar Swiss, well, I've kind of liked Dollar Swiss. I've been wrong on it, but it is making some slow ground higher. I don't think we're going anywhere in the next few hours. I think it'll probably be the CPI if anything does move at all. The safe haven move that has seen some favour into the Swissy, that's dissipated now, and we are heading a bit higher. I think we're heading back towards this 90.70, and then possibly up here to the trend line of 91.30.40. Now there's good resistance above here at 91.50.60. I doubt we're going there anytime soon, and possibly today it'll be covered by this sort of 90.75 resistance. Even below there's 90.60 is the 61.8% retrace of this move, the recent move down, and beyond there, as I say, we've got this sort of 91, 90, 95, 91 the area, 91 the figure area. So well, I like the dollar. It's probably going to remain choppy, and we've got the 100-day moving average acting as resistance right ahead at sort of 90.50. So I wouldn't be getting too excited at this point in time. So the dailies, they're flat. So possibly, just for the time being, we sit around above 90, the figure. I hope if we do get a break below there, I'd be a bar around 89.85, looking for an eventual move higher. But on the day, probably fairly choppy, but reliant on the EU CPI. Now the Aussie was really the star performer today. It hasn't done an awful lot against the US dollar, although I see it's heading higher as we speak. It's come up from 87.75 to 87.90, but it performed well on the crosses against all the crosses really, Euro, Swissy, Yen, and also the Kiwi. So and I kind of like the Aussie for a move higher. This is the 4-hour chart. It's beginning. It looks to me as it's beginning to wind up for a bit of a move to the top side. But there's good resistance up here on the hourly charts, so it's a bit messy really. But the 88.25, 88.30, that's going to be resistance, and above there we're heading back towards, so that's 88.30, and then above there up towards 88.85, 88.65 is the 50% pivot of the whole move down, and then we've got the descending resistance up around here just above 89. Now, I don't think we're going there anytime soon, particularly as China's out today and also next week. But we could see a bit of a squeeze higher. And as I say, overall, I actually like buying the Aussie on dips. The downside should be well protected now. It's sort of 87.25, 87. If I'm wrong there, we're heading back to 86.60, 86.30. But I don't think we're in for that anytime soon. Kiwi. Well, we just had the trade balance out for the Kiwi. That came in at 523 as expected, at a 550, 500, 550 trade surplus. Now that's taken the Kiwi actually a little bit higher, and the momentum on the hourly charts is reasonable. Now we did get down to the 81.40. We actually broke it, got down to 81.25. I suspect that's going to be pretty good support down there for now. The 4-hour charts though are still pointing lower, and the dailies equally look as though they're picking up some downside momentum. So while the hourlies are pointing higher, I do like the idea of selling it as we approach back towards 81.90, 82 the figure, and this is where the first FIBO support is, and it's been good good support. So I think another test of that resistance will probably meet some good sellers. The we're now sitting above the 200-day moving average, which is down here around 81.38, and this sort of 81.95 area. I don't think we're going much above 82.25.30 anytime soon, and I'd be a seller on rallies, as I say. I think the momentum does look as though it's picking up to the downside, which kind of makes me think that Aussie Kiwi's probably seen a medium-term low, and we're probably heading a little bit higher there. Aussie Kiwi's currently at 107.70, and I wouldn't be surprised to see a test of 108, 108 and a half in the days ahead. Possibly where it might be a sell again, but at this point in time, I'd be a little bit reluctant to sell it, and I'll do some more work on that over the weekend for you on Monday. So that's about it for today. As I say, we've got the what have we got? The Euro, the EU CPI later on, and then after that we've got the. There's not an awful lot out of the States. There's some secondary data. We got the Reuters Michigan Consumer Sentiment Index. And also we've got the personal consumption spending data out of the States as well. So I'm not looking for an awful lot, particularly in Asia where, as I say, it's Chinese New Year and liquidity is going to be thin. So that's about it for today. Have a very good weekend, and we'll talk to you on Monday. Cheers.